Welcome. Today is Wednesday, September 24th. There's news at 10 a.m. Medium impact new home sales. Let me show you. Overall this week, S&P 500 hit all-time highs on Monday, moved sideways Tuesday, big dip. And today being Wednesday, let's get on the charts. It's 9:48 right now. I filmed the trading recap yesterday earlier, and now we're going to this one, so let's go. And before we start, let me just say, quick briefly, I'm not trading in the month of September. From September 8th and beyond, I stopped trading on September 8th. I started this challenge to say that I will show up to every market open, or I will show up to each market open, each New York session market open, provide a market recap, but no trading, no taking positions. I am going through exactly as if I were to take a position, just without actually putting any money on it. So, and if anything, I would enter on this sim account. So let's go. Now, why am I not? Now, why would I not enter? Why would I not enter on a like a funded account or anything else this month? Historically, the S&P 500 has been a month that more times out of not, the market has pushed minus 1% out of 10, or out of in history. The S&P has produced minus 1% during the month of September. Now, I was trading up until, like I said, the 8th, and it was a positive trade on the 8th, but it might have been a losing trade. But I had seen news come out, and it was a study of the S&P 500 over time within the month of September, and it's a bearish month. It's not a productive month regarding my strategy or the strategy that I use. So instead of putting money into a funded account, I can put money into long-term investing towards my portfolio. And in this experience, I've learned so many things. For example, prior to this month, I had been trading purely on technical analysis. I had a regard for high impact news being like yesterday. If Trump was speaking at 9:50, I wouldn't trade, but I wasn't at a point of understanding where are we at in the market. Let's think on a bigger scale than the computer sitting in front of me. How is the economy? And this allowed me to get some clarity, because when you trade with a structural analysis, or with a basic understanding of where the economy is at right now in confluence with your strategy, you're able to stay out on days that you're better off, and you're able to up the ante on days that you have a pretty good idea where things are going. Now you don't know, anything can happen, but you have a pretty good idea of where things are going. It's opened my mind up to it. That it is something bigger than just, if you solely rely on technical analysis, you'll be banging your head on the wall and you won't know why. Like, why are we sliding? Like yesterday, if I wasn't considering news, why was price sliding sideways? These weren't really things that came into my head. I was more thinking, okay, well, we've been moving sideways. Here's a recent draw on liquidity, and then here's a other previous draw on liquidity, and I was relying solely based on draws on liquidity, and that wasn't very helpful for me as confidence goes. And I thought about it. I said, if I were to go through this month without actually placing a position, but doing everything up to the point of actually placing that position, I would likely have more experience going in, or I would likely have more experience coming out than I did going in. And I was like, I got to. So I'm starting to understand too. Below the funded account, well, at least I don't have like a, what happens in historical times. I watched an Andrew Tate video. He was like, what are you scared of? Like, if you fail now, if you fail this day and age, like, nobody's going to kill you. You're not going to get your hands cut off. You're not going to sleep in mud. You're not going to go hungry. It's just, we live in a different time where failure is not something to really be afraid about. It's kind of something you lean into, because when you go all in, you come out knowing more than you did when you were sitting there and not taking those risks. So, and I mean this from a sense of experience, at least 5+ months of experience. I'm not just saying blow your fucking funded account and, full port. I'm not saying that shit. I'm simply saying, when you have your feet on the ground and grass isn't growing above your feet, meaning you're showing up, doing the work, journaling, reading, market recap. When you're doing these things consistently over time, in order for you to get to that next level, you need to up the ante. That's how I feel. That's the point where I'm at. And again, I'm not saying full port, but I'm saying I was coming from a point where, so along this journey, how did I start off? I took a month of going through TJR's trade boot camp. So I got through that boot camp in about like 1 month. It took me 1 month. I didn't go on TradingView. I didn't go on the charts. I was just writing notes. And then after that month, I hopped in, bought a funded account, and started trading. Now, what would I do going back? Is I would probably take 3 months of a demo account, 3 months of profitability before you consider buying a funded account, because it's not about the money still. You're still writing your notes, and you're just getting in the mix of your market recaps, your trade journaling, and you're just trying to stay consistent on that. And that's what's most important within all of this, getting comfortable in that and comfortable being uncomfortable within that, and also the confidence that will come with it of programming your brain to do this work. It takes some time to get adjusting, and within that 3 months you learn very, very significant very significant lessons, because you learn it's a lot more than just placing a position. And if you neglect if you neglect time spent in just getting in the groove of it, if you miss that, you really it's tough, because in my experience I found when I jumped straight to the funded account, I had a few weeks that I would say I was probably just better off not trading at all. And if I would have been in a demo account, I would have saved myself money, maybe been able to save more of that money, but I was at a different point of mental capacity at that time. But those 3 months of consistent demo account, you move into a funded account after 3 months of profitability, and you have a lot more confidence than you did coming into all of this. Then you're on that funded account. But what I did was I just was on funded accounts from that second month, so probably month 2 up until now. We're probably at month 6. I started in March. We go March, April, May, June, July, August, September. All right, we're nearing month 7, at the end of month 7. But through month 2 through 6, I was on a funded account. Mind you, I wasn't blowing funded accounts every other day, but there was a period at the start. Blew a funded account, blew another funded account, and I'm hitting max daily loss limit. And I don't know why I'm really hitting daily loss limit, other than the fact that I do know why, is the fact that I'm just oversizing, over leveraging. And when I talk about understanding where the market's at currently in confluence with your strategy, being able to size up on those moments is something that's very significant regarding your just profit and loss. You have bigger opportunity, and you want to take advantage of that opportunity. So now, month 6, I mean, throughout this entire journey, I've probably been, overall, if you accumulate it, a break-even trader. Actually, probably not. If I haven't received any payouts, then I'm not a break-even trader. I have just paid in I've paid in subscription fees. And in that time, from probably month 5 to 6 or 4 to 6, I kept a funded account, and it was like I stopped oversizing, and I really started undersizing, trading micros. Yeah, trading micros, but only like 2 to 3 micros, and only one trade. So from likely month 2 to 5, I was probably trading within like an average of like 5 trades or 4 trades. It was a horrendous number. But you start off with that demo account. It doesn't necessarily mean that you're going to avoid this, but you will understand how to navigate it. But at the same time, if I were to take my mind back to that moment where if I didn't have a funded account and I was just trading, or I was just coming off of TJR's trade boot camp, and I was like, okay, now it's time to see the charts. If I would have directly gone into demo and then I'm seeing an accumulation of money in demo, definitely in an adolescent's mind, it becomes something that I wiggle my tail and I just I gotta just do it. I wanted to get the funded account, get the payout. I was like I'm gonna get a payout in August. I'm gonna dot dot dot. No, no, no. It's not like that. It's not like that. So up the ante, yes, in regards to not in a point of where I am at of trading on like a funded account where it's not my money, the sim account initially, it's not even, that's how I see it. And then say I'm on my own personal live account, if I were to be, obviously I am risking according to my account equity. And in an opportunity like a funded account, you're able to just raise your risk. Hey, look at what's going on here. So you're able to raise your risk on a funded account, especially since it's just not your money. And especially if they're gonna scum you end of the month no matter what, you might as well up the ante. So still on the daily, price is bullish or not. Um, yeah, it's actually still bullish, but New York Open price slid yesterday. Price slid. Will we really see a V-shaped recovery out of this? If you get a 5-minute candle closure outside of this, target this equilibrium point as your stop loss and you take profit right here. And during the month of September, news has been it's been hectic. Let me show you. You got yesterday news. Monday, FOMC member Myron speaks. Thursday last week, unemployment claims. Fed cut rates last week. Retail sales. The week before, consumer inflation, consumer sentiment, CPI, PPI. Week before that, unemployment rate, Trump speaking, unemployment claims, ISM services, PMI, job openings, ISM services, Trump speaking. You get the point. This candle closes in 3 minutes, 8 seconds, 5 seconds. What you want to see is overall increase in volume to the downside, like this. And a 5-minute candle closure outside of the opening range. This would be your stop loss. But if we have this fair value gap on NQ, I would think price would fill this imbalance. But what do I know? Let me enter on the sim account.
Order rejected.
Order rejected. That's too bad. Let me put it up on here. What was everything?
Order filled. Order filled.
All right, so let's see what price does. 5 micros total. So the cherry on top to what Andrew Tate had said was, as long as you keep trying, keep failing, you'll be somewhere further than you were when you started. And who gives a shit? Let's see, the perfect trader would have taken a position today. Because I am in this challenge. Something I'm thinking about here is the fact that price was bullish going into New York Open, and was bearish leading into was bearish at New York Open. Therefore, I think I'm on the wrong side of the where I am right now. Price made a new low. Now to recover and go higher, taking out these draws. That's how I'm seeing this. Like even a day like today is deceiving. Because would the S&P 500 really move down on a day like today with the current sentiment? That's a new question that I'm starting to ask, but I don't know. Tesla's pushing. Looking like Sideways Central, huh? All right, y'all boys. That is that. That is that. That is that.
With the W9 and the W2, how do I file the F with with the W-9 and the W-2. How do I file the W? I ain't even got no damn hair, and I want to make an appointment, man. Y'all do laces.
we moving just sideways city, y'all boys. So, since we're dancing, or since price is dancing on minus 0.01% to plus 0.01%, instead of it actually being bearish on the daily, I might as well just get out and call it a day. So that's what I'm going to do. This is a demo account. I don't want to miss. Ooh, maybe it's my FOMO. I don't want to miss the opportunities to actually place a position and get that practice, because even like being in a demo account like this and getting this practice in, it's good for me to understand how I'm reacting to it, as far as like looking at price and looking at P&L. These are things that I find like are the habits that get me started towards over analyzing what's going on in front of me. So with that being said, getting the opportunity to just place a position, although it's not my risk, still just getting into it. Recap the trade. I'm going to journal the trade, and then I'm going to get off the charts. I have my stop loss placed, take profits down here. I'm just going to let it go. Like I said, it's a demo account. It's not that big of a deal. All right, y'all boys. Peace out.